F9.
Alright boys, welcome back to another video. Today, what we're going to be doing, I just realized, like, why not drop a full back testing with one of the people that I trade with, just help them understand and simplify a little bit more of what I see in the markets and what I try to do. Remember, I don't like to consider this my own strategy, just more so how I utilize ICT concepts more than the others. If I were to compare it to myself, any other trader, 100% would be Justin Werline, or yeah, mostly Justin Werline. So if you guys do like see this video and like don't really understand too much, go watch his trade recaps. Really informational. I mean, he's the one that really got me to start doing this more than anything else. I would say more so I just utilize inverse for value gaps a little bit. He still utilizes that, but yeah, I just think that I use inverse for value gaps in more than everyone else in the game. So let's just say Lucas started inverse for value. I'm just kidding. Okay, so getting started, we'll go to the next day because, by the way, this was recorded on my MacBook. You guys won't see that, but it ended up crashing, blowing up. So we're on the PC now. Let's go to the next day. So we're gonna trash everything. So more so what I do, boys, is, by the way, I have E-mini here for SMT divergences is basically what to look at. Like, for example, this swept all the highs. Let's see if this did as well. See, look. Wait. 3 o'clock. Oh, this is even in the daily. Look, for example, we swept these two. This one we haven't even swept one. So we swept 1, 2, and look at this SMT divergence. This middle candle swept this. This middle candle did not sweep this. See those SMT divergences right there and then. Alright, so to start off, we retrace into a daily fair value gap. We're super bullish in my opinion. We'll mark out this. Let me double click this. I don't know why that was there. If you guys ever do get this, like, two things, just double click the bottom one. It'll happen on TradingView, just not only FX replay. It'll happen on TradingView as well. I've had that happen to me quite a few times. Okay, so mark out the high. Then I go to the 4 hour. I don't really mark too much unless we are currently in a fair value gap. I'll go ahead and mark this out. 4 hour inversion right here, so we can make this green. Have we already retraced? We basically did already retrace, but we'll keep it. And by the way, in my opinion, inverse fair value gaps are a lot stronger than normal fair value gaps. But I mean, if you look at what we have here, a fair value gap inside of an inverse, beautiful, right? And this is where an optimal trade entry would be, a OTE. Or I don't know why I named that 1 hour, sorry about that. So, by the way, boys, fair value gaps, liquidity. There's resting liquidity inside of fair value gaps. They're liquidity pools. Where does the market like to move? Towards liquidity. Stop thinking this is the only liquidity that makes market moves. Resting highs and resting lows, or equal highs and equal lows. No. Fair value gaps have liquidity in them that has not been tapped into yet. We retrace to tap into the fair value gaps, grab more liquidity before we move higher. Same thing here. We like to take stop losses or buy hunts, and then we come back lower, right? It's the exact same concept. Liquidity is liquidity, whatever it is. Order blocks, fair value gaps, inverse fair value gaps, resting highs, whatever it is, mitigation, whatever, right? We're gonna hunt it, and then we're gonna move the way the market wants to move. So stop thinking market. And this is one of my favorite things by Justin Werline. Don't think you know the market, but rather listen to what the market tells you. So I think I can know we're bullish, bearish, whatever. But if I don't listen to what the market's telling me, I will never be able to be transparent with myself and the market to be able to take winning trades. So we are in the 4 hour. Okay, we'll mark this out, even though, yeah, whatever. And then we'll mark this low, and then keep it there. Obviously, if we just come straight down and just grab this really quick, I'll come back out and probably mark this low and this low. But I don't think we will. Overall, we created a CISD here. We didn't tap into this 4 hour, but we retraced, and I think we're bullish for the day. So we'll see. And ES is at all-time highs. So yeah, when we're at all-time highs, we should be bullish. Okay, let's keep looking. Okay, fair value gap right here, ran through. Don't care to mark out. Oh shoot, we inverse this fair value gap, mark it out. So this is why I love marking fair value gaps out, because we don't know what at first I thought the price was bullish, but it may be bearish now, right? We'll see. Let's go to the 15-minute. We're respecting this 15-minute bearish fair value gap. Value gap, right? I'm just seeing what we want to do. Maybe we want to come higher. I'm not going to mark that out, but because the blue line's literally a point away. We may just come here, manipulate, grab liquidity, wick it, and then inverse another fair value gap, and then we want to come for these lows, like whatever, right? Because look at all these equal lows right here, just resting, right? Let's go to the 5-minute. Nothing too crazy. Respecting this 5-minute, overlapped by the 15-minute. We could mark this out, but I don't want to. We could mark this out. I love to mark this one out because we have a fair value gap right under it. So we may sweep this liquidity and then be bullish. But like I said, I just mark all these confluences out just to see which way we want to go, so I can attack from an angle and basically say, okay, so we're coming down here, now I think I know what's ready. Oh, we're coming up here, now I think we know what we wanted. We can manipulate higher to sweep this and tap into this 5-minute. We'll see. We'll let the market tells us what it wants to do. So let's go. Comes lower. Look at that beautiful sweep. Beautiful sweep on this liquidity, and I think it got this liquidity and this liquidity. Beautiful. So sweeps that. We also create a 1-minute. So I'm paying attention to what the market is telling me right now. Oh, we wicked through it. We didn't close through it. Okay, we may be bullish now. But we also created a fair value gap. Let's see if we run through it or not. Nope, we respect it. Now we're bearish again. Boom. Oh. Keeps respecting that 1-minute. I would take a short here, but we literally have... Where is this? Oh, we have liquidity all the way down here. Okay. Let's see what ES wants us to do. ES is just consolidating. I may take a short right here, honestly. And the reason for it is because we are showing bearish momentum, even though we are in these fair value gaps, which is why I'll go to this high. Here. And we'll see what we want to do. Oh, I don't know why it tapped us in, right? Okay, I thought this purple line. Okay, we're good. That's why I glitched out for a second. Beautiful. Can go break even now, as we have no reason to come higher. I'll go to this body candle, and who knows, it may not come all the way down here, but we'll see. Beautiful trade.
Beautiful trade.
And so the reason why I saw that, obviously I probably wouldn't have risked
700.
Yeah, 750 or something like that. Probably would have risked like $300 or something to get a $900 to $1,000 trade, 3R, right? Beautiful 3R trade, 174 point trade. I mean, it doesn't get better than that, boys. So what I saw is, like, we kept respecting this 1 minute, right? And I'll show you guys another case is, like, maybe we would have disrespected this 1 minute, but we could have disrespected this 1 minute to come and mitigate into this 15-minute. Does that make sense? Like, we may disrespect a lower time frame bearish to go respect a higher time frame bearish. So do not get confused with that, and always make sure to check higher time frames. That's a mistake I made on this trade. I didn't check 5 minute. right? We could have came back up and respected this 5-minute fair value gap. I didn't check 15-minute. We could have came back up and swept this and then clocked into here or whatever. But I saw that we kept respecting this 1 minute. I mean, consequent encroachment. Like, we're not even going higher than this, right? Beautiful, like, respecting it. Accumulating. And then we just run. So what I do is, like, with resting liquidity, I love to see if we run through a fair value gap with that. So we ran through a fair value gap with that. Right, we displace through this liquidity. So whenever I see a displacement through liquidity, it really tells me that we are bearish or bullish, one side or the other. So my entry was consequent encroachment or something like that right here. Tapped in, was in drawdown for 2 ticks, and then beautiful from there on. Okay. So that was the trade, and I hopefully I explained that well enough so you guys can understand. Overall, I was bullish on the day. I saw what the market was telling me, flip my bias. You got to be able to flip your bias, but don't flip it too much. You guys will know when to flip your bias by just taking time in the market. You're not going to know your first month, guys. That's the hard truth. It takes time. It takes time. It took me maybe 3-4 months to understand what the market actually means, not just what the meaning behind order block or fair value gap or liquidity. No, I'd actually put myself in the game to actually learn what the market wants to tell me. So let's go to the next day. I'll do one more trade for you guys. So same thing as the last day. We're gonna trash everything. New day. If you guys lost or won, new day. We don't care. Okay, I don't know why this is showing me that there's something new. So we checked daily yesterday, but we'll check daily again, see if we retraced into anything. Beautiful. So like I said, I will only mark out a daily if we are currently in the fair value gap itself. And yes, it's going to be annoying because it's going to overlap everything, but it's alright. It's whatever. Let's go to the 4-hour. Beautiful, swept, respected. This, beautiful. I mean, doesn't get more beautiful than this. I think we're absolutely bullish today. However, for example, if I do catch a trade off the market jump, I will probably put my take profit inside of this liquidity zone because I know price wants to retrace into this zone because there's liquidity resting in this fair value gap. But really be aware. I do this on a very rare occasions to where like liquidity is like another 200 points above me. I'll go to the nearest liquidity and it'll be either like as soon as we tap it or consequent encroachment. It's very rare. Do not make this your whole trading setup, boys. I don't know. I've only
You just have to adjust with the market.
Yeah, I just adjust with the market. Exactly. Oh, this is 4-hour. So 4-hour fair value gap. We'll mark this one out as well. So I've maybe done that like 4 or 5 times in the live market, trading prop firms and stuff. Back testing, I've probably done it a few more times. It works out for me, but I don't suggest it too heavily, just in rare occasions to where like liquidity is literally 300 points above us. So, right, 1620, 350 points above us. Anyways, let's go to the 1-hour. And see what I'm saying? It's like 4-hour we couldn't see this, but 1-hour we could see this. And this is beautiful resting liquidity. So that's why I'm saying like 4-hour, like it's just a wick to us. 1-hour, it's literally a hanging liquidity right there. Hanging, I can't speak. But hanging liquidity inside of this beautiful 4-hour. I usually don't like overlapping, but we'll just mark this out. Since yesterday was bullish. And then I like to be able to see my stuff, so I'll make this a little bit shorter. Perfect. That one's too long. It's whatever. I know that's a daily. From here, can we mark anything else? 1 hour. Even though this has been wicked through, it still means it can be respected, just like this one. So this was already wicked through. A lot of people think once it's mitigated once, it won't respect it again. Yes, I get where you're coming from, but that's not true. Look how this respected it again and just wicked through it. That's all. So we'll fill this out, And then we'll go to this low, even though we swept liquidity. I don't think we're gonna manipulate lower because we've already swept liquidity London, or previous day, sorry. But we'll see what we want to do. Maybe we just sweep London lows. This is even London lows. This is Asia. London lows are right here. Oh, not right there. And I don't trade this way. I know a lot of people do. The London lows, New York lows, prior day lows, all that stuff. Liquidity is just liquidity to me. Don't get on my head for saying that. We swept this high, so we may come lower to expand higher. We'll see what we do. But overall, we have a 15-minute fair value gap. I mean, this would be beautiful to sweep this again, but we'll see. So make this green. What else? Bears 15-minute right here. So what goes through my mind when I mark out is like I'm looking for very specific ones that are resting above equal highs, to see like if we're able to respect this. Because like say there was one like, I don't know, like all the way up here, I'm not gonna mark that out because like I could mark this one out, but it's just like overlapping with the 4 hour, overlapping with the 1 hour. My goal is to sweep this liquidity right here, or this liquidity and this liquidity. If we do end up respecting this, I'm gonna go break even, and like we move on from there. Like I'm just not going ham and just fair value gap, fair value gap, fair value gap, fair value gap. You guys will know and understand which fair value gaps to see. And most of the time I am marking out most of them that haven't been mitigated or tapped into. Sometimes I am, like, you know, it's just, you see it from the game. You know, you guys aren't going to be doing what I'm doing. You guys are going to find your own strategy once you become comfortable knowing the terms, knowing how the market moves. It's just how the game works. No one uses the same strategy. No one. They just use ICT concepts more than the others. Okay, and then we can go into the 1 minute. Beautiful. So we sweep this low. So we sweep London's low. Even though I don't trade this way, I'll interpret it just so you guys know what's happening. And obviously London low basically means the lowest point in the London session. This is lower, but this isn't London session. London session is at 12 my time. Wait. Yes. It's at 12. It's at 3 a.m. New York time, 12 at my time.
It doesn't really matter for you because that's just how you see the market, huh? Knowing if it's London or Asia.
Yeah. Like I don't even trade this way, but like London started here, and the lowest point from here on out would be this low. Right. Obviously, we swept it.
Just letting them know the terms of you know trading.
Like exactly. Okay. And so now so how people do trade this, I will let you guys know, is like once we sweep London lows, we either come for Asia's lows or we reverse to London high, and this is London's high. So we'll see what we want to do if we want to become bullish. But so far we are respecting this 5 minute. Okay. Oh. Also, I won't be trading till 6:45. I just noticed this. I think there was news yesterday actually that wait, 6. Yeah, I did trade through news yesterday, so my bad, boys. I didn't even see that. But it was okay. This is yellow folder, so it shouldn't be too bad. But let's see. Hopefully we don't just dump, man. I'm gonna skip till news, but I'm also trying to pay attention to what the market's telling me. 2 more candles. News literally did nothing. Just literally a normal candle. This was a bigger candle. Anyways, so we inverse this. We're retracing into it. Beautiful. Let me go to a higher time
IFG. IFG.
Yeah, sorry. Right there. Beautiful. There we go. 5 minute. See how we're going higher, but we didn't notice we were retracing into a 5 minute bearish. So you think we're bullish now? Nope. My bad. I didn't check 5 minute. So this is why we always got to check higher time frames, because I would have probably took a bullish trade right there along.
Not knowing it was just going to sweep liquidity and come back down.
Not knowing it was just retracing. Exactly. Right. So then this looks good though. So we could respect that 5 minute to come and sweep this liquidity by also respecting this 1 minute. So we could do that. And that's why I always love like marking everything out to see like what story out. So I put like 10 stories coming into the market, 10 stories out there, and I love to see which story the market wants to tell me for today.
Right.
So no, we're just coming higher. Create a CISD right here. Even more important, CISD right here. See if we can create a fair value gap. Yes, but also that's a clean sweep while still respecting the 5-minute. So
So if that liquidity on the left side would have been higher, you would have been in right there, right?
if we would have closed like right here instead of wicking it, see how we wicked it and then we closed below it?
You can still respect that liquidity and come
Like
back
yes,
down,
we
so-
created a CISD, but we didn't create a market structure shift or breaker structure. Yeah, beautiful. So overall, I would most likely be in right here. I'm not going to though, and I'd probably go lows right here. No, that's too low. I'd probably go lows right here, that wick, and then highs right here. 2R. I won't make this trade because I personally think we wicked beautifully while also respecting this 1 minute. Oh my gosh, this is a beautiful short. If we inverse this, by the way, this is not a real trade. Again, I'm just like forward testing. See, like this would have been my trade if we'd have closed here. But if we inverse this, I'm in on a short. I might be in right here on this short. Yeah, look at that. Look how beautiful. Okay, we'll go on a short. And we'll go, I'll probably get screwed over here because we probably are going to take that. But, I mean, shorts are calling my name, literally. This trade would have probably worked out, but shorts are literally calling my name. Here, we'll go in case it retraces back into this.
And add a better risk to reward on this.
Exactly, 100%.
Add it, cause you don't feel as confident, right? So wouldn't you go lower?
Yes. I'm just back testing is important to like do what you do in real market. I would have probably risked 300, 200 bucks, 150 bucks for whatever this RR is, 150 for like 380 maybe, something like that. But we'll see what price wants to do. Yeah, it's not even gonna tap me in. I mean, that was a beautiful short. I might get in right here actually. Are we serious? Bro, just tap me in, gang.
Yeah. If I ever see edging, bro,
price dude. The market literally edges by like a quarter of a point, a tick, that one day. But let's see if. And then I'm looking at ES
today. In today's trade, bro, in the recap that you guys probably watched already,
literally
we got ticked in from a beautiful entry.
And it overall works. We just didn't get ticked in, boys. But that was a long trade. 704. 2.5 hours. Not. Yeah, that is a long. But we didn't get tapped in, boys. You know, overall we were. Dang, where did I put it? Yeah, we missed it by literally a tick. Like 2 points. 222. 1.5 points. But yeah, so I should have probably just went like right above this to where it sweeps this while also respecting this, and then got ticked in, and then boom. But what I saw is I saw a beautiful long here because where is it? CISD right here, fair value gap. We tapped that fair value gap. We grabbed this high. So beautiful trade there, and we could have swept this high. But the reason why I knew we weren't going to be super bullish is because of this wick. And look how long price takes and struggles to close above that. We just weren't showing bearish momentum or bullish momentum. While closing above this, we sweep this and only wick above it, barely close, but that's not even an engulfing bullish candle. We create an inverse fair value gap, so disrespecting this fair value gap. I'm not going to make it red and do the whole juggly thing. We also create a fair value gap in here, creating a BISI, buy side imbalance, sell side inefficiency. Bullish fair value gap, sell side fair value gap. or sorry, bullish fair value gap, bearish fair value gap is basically what a BISI means. So
When they
it's
line up, when the fair value
exactly when
lines up
they
with a
line up,
bearish and a bullish.
and it could line up like 50 minutes away. For example, like say we had a bullish candle right here. I know this is very messy, boys, but give me a second. Okay, say we have a bullish candle right here, and instead of disrespecting it right here, we come higher, 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 and then we disrespect it. Oh, hold on. We can still drag this out and consider this a BISI. We can drag it out however long we want. But until we disrespect it with another fair value gap, it is a BISI. And so I love using BISI. So I saw a BISI, saw that we retraced into it, missed this because I was just skipping too much. And then I don't know why it does that. I hate if you hold shift, like you hold shift to make your line straight, right? If you hold shift here, it just expands. I hate that. Anyways, so I saw a BISI here, and then we reswept liquidity. This is what turtle soup is, by the way, boys. Manipulating higher to sweep liquidity inside of a fair value gap while also respecting it. So it's basically a manipulation of Judas swing. This is a Judas swing, turtle soup, manipulation, whatever you want to consider it. There's thousands of ICT terms I can just replicate into my strategy.
So turtle soup is a liquidity sweep while respecting a fair value gap.
In terms of what I know, yes, it's coming back up to fake out traders that thinking we're long, but all we're doing is respecting a fair value gap and sweeping liquidity. This could also be known as a Judas swing. Judas swing is a fake move up, respecting an order block or a fair value gap to fake traders out, or we could call it manipulation because it's manipulating traders to take a long right here inside of this fair value gap to eventually be stomped out, right? So I saw this short, and I mean it played out beautifully. $1,800. It's whatever, boys. Some missed trades, but thank you guys so much. God bless you guys. I hope you guys are thankful that Jesus Christ woke you guys up and gave you another chance to trade, let alone gain more knowledge from me and whoever else you guys watch. And I'm glad I could help, and I'll catch you guys tomorrow. Peace out.